Well, the one benefit of low interest rates is our clients, our ultra high net worth clients, they can borrow money very cheap, right, and invest in higher yield opportunities. So I think overall, that's one opportunity. On the downside, everybody's searching for higher yield overall, and where do you find it, right? So overall, though, we think that rates are going to stay flat for some time, and a lot of people are looking at hedging future interest rate exposure now.
But if you're hedging, then you're going to get even less returns. Investors have been so frustrated over the last few years that they're not getting 10, 12, 15%. If you're now in a lower return environment and you're going to add on hedging, well, get ready for less.
Right, right. Well, I think it's again, overall uncertainty across the market, right? And so people are just very, very cautious. And they have to remain so, I think.
Munis was a story for 3 years. I mean, within high net worth individuals, the muni game just continues to go forward.
Right.
There's got to be a limit. I mean, there's only so much Nebraska paper out there to buy, right?
Yeah. Although we think there's great opportunity in high quality assets, including munis right now. Good opportunity for duration and getting into munis, as well as high grade investment bonds. So we're positive.
What's your duration on munis? I mean, typically it's a longer duration, 20 years. I mean,
right.
Are you working
20,
at that
30.
duration?
Yeah, and it's all about selection, right? We've got a fabulous muni team, and their performance overall is 100 basis points above the benchmark. So they're doing a great job, but it's about quality of the credit and it's about duration.
So you said that obviously your clients want higher yield. And in a low interest rate environment, that's tough.
Right.
At the same time, often higher yield comes with higher risk and higher volatility.
Exactly.
And less liquidity.
Exactly. And so how do you balance, when your clients come to you, how do you balance those two against one another?
Yeah, it's challenging. I think the main thing is that we really guide clients to diversification. And so you need a whole mix across the asset classes. Some of that includes less liquid investments like private equity and real estate, where you get higher returns but less liquidity, right? So it's a balance across the board.
We've got to talk politics for a moment. More and more investors are cautious, and that's leaving them sitting in cash.
Yeah.
And if they're sitting in cash, that's not good for your business. What do you need to do to get those investors off the sidelines when there is all this uncertainty? We're facing the election where people have their hands in the air saying, I don't know what to expect.
Right. Well, I think that's a big factor. It just fuels the uncertainty, is this current election environment. We're all talking about it. We're talking about it with our clients every day.
What are you telling them?
Well, it's impossible to predict, right, what's going to happen and what the outcomes are. So ultimately, we go back to diversification. So what we're saying today is no different, right? No matter what the outcome. We're not trying to predict the outcome. We're just saying stay diversified.
Is there a market-friendly candidate?
Hard to predict. It's really hard to tell with these candidates. It's certainly an entertaining election process, but it's hard to predict. So again, we don't try to modify our outlooks or asset allocation by guessing who's going to win. It's just really stay diversified, stay the course.
Let's talk about the landscape of the industry of high net worth wealth management.
Everybody wants to be in it.
Well, everybody wants to be in it. You're not old enough to remember where you made 400 and 500 basis points. I'm kidding. But then you made a field goal, 300 basis points. Then it was 250 basis points. And now I'm guessing blended, you're lucky if you're making 100 basis points. That's an ugly trend. Why will that trend change? When do you get to fee stability, given the competitive forces out there?
Well, the ultimate opportunity is the market itself, right? Especially the ultra high net worth market.
I'll agree with that.
Growing
The pie
the
can
overall
get bigger.
market, right?
No question about it.
So today it's something like $16 trillion is expected to transfer from one generation to the next in the next 30 years. So the ultra high net worth market opportunity is huge. And Citi Private Bank is uniquely positioned to take advantage of it because we are a global private bank. We're in 50 cities, in 15 countries, and serve families in 29 countries.
That was a shameless plug of the highest order.
Sorry.
I mean,
couldn't help myself. But it's
week.
true though, because families, the world's getting smaller, right? And it's global, and there's a lot of capital flows around the world, and not many firms can solve the needs of these families that are the big ultra high net worth families around the world.
But just last week, Sergio Armati, CEO of UBS, said to Tom, we're no longer in a time where banks should be all things to all clients. Figure out your lane and simply be good at it. What is it about your lane that you're so good at?
Well, I think Citi broadly has worked very hard. We're fundamentally a different company than we were in 2009.
How?
We're simpler, safer, stronger. We've shed $700 billion in assets. We've sold $60 businesses. So we are one of the best capitalized banks in the world today. And again, we're simpler, safer, and stronger. And what we are is scaled to serve. So we are a global bank, but we're scaled to serve our clients, whether they're multinationals or ultra-high net worth families around the world.
Yeah, I'm interested in what you say about the increased supply on the side of high net worth individuals, but there also seems to be increased competition. Every time we turn around, there's another major bank saying we have to either get into this business or ramp up our business, in part because of regulatory issues and reserve requirements, right?
Absolutely.
Do you feel a lot more competition as you're going out there for your business?
Interestingly, just the opposite, at least in the United States. A lot of the European broker-dealer models are closing shop, right? And they're going back to Europe. It's very difficult to run a broker-dealer business in the U.S. and make money at it and deal with all these regulatory changes and
Deutsche
costs.
Bank sold their private wealth business here.
They did. So the industry is changing quite a bit. We are not a broker-dealer model. So it's a different model, and it's really a fiduciary model.
Some of us are not high net worth because we're writing checks for summer camps. I'm
Private
afraid
school
to ask.
tuition.
Your shop at Fortress
You meant
Corbat.
martinis at the Carlisle. That's where some people are spending their money.
At Fortress Corbat, what is the definition of high net worth?
For us, it's 25 million plus
Yeah.
in net worth. Sorry,
So
we can
close.
make exceptions
So
though.
close.
How much does pain in the oil sector and in China affect the landscape of those clients for you? Because for the last 5 years, we've seen the rich just get richer as asset prices rose. But now we've got these hiccups. You know, as Tom said, not everybody's got 25 large sitting in their savings account.
Well, but we do see the rich getting richer, as you said, overall, right? And the ultra-high net worth market continues to grow. I mentioned the $16 trillion that's going to move in the next 30 years to the next generation. So at the end of the day, our investors are long-term investors, right? And so over time, they're doing very well. And they have access to products like private equity and real estate and other things that have higher returns.
None of us are your clients. We probably won't be, but
We aspire to be.
Yes,
We aspire
to have you
We
be our
aspire to be. Thank you so much for joining us today. Tracey
you.
Warson, she is head of Citi's private bank here in North America.